Ladies and gentlemen, welcome back to the Crypto News Podcast. It's your host, Matt Zahab. We are buzzing as always, coming in hot from Toronto. We are back from Dubai. Miss it already. That place is just so magical. It's like a big museum. Every bar, every restaurant, every space you go into, everything's just immaculate. It's lovely. And now we're back in Toronto, and I think I've seen the sun once in the week I've been back. So we're battling, but another pod, the show goes on, baby. Super pumped to have Tascha Punyaneramitdee on the show today. She serves as the core contributor and founder of INIT Capital. I love that name. Can't wait to get into that as well, which is a liquidity hook money market designed to enhance liquidity layers. Her prior role in leading Stella, a protocol offering multi-chain leverage strategies, highlights her significant contributions and expertise in the sector. She is a true crypto OG. Maybe not true in the sense of what she's built. Got in 2017, still pretty early. We've been waiting for this one for a while. Finally have you on. Tascha, welcome to the show, my friend. How you doing?
Thanks so much, Matt. Glad to be here.
Pumped to have you on. Before the show, you and I were talking a little bit, as we always do. You know, you got to get to know the guest and the host a little. And you let me know that you were living in beautiful Thailand. I've yet to cross paths with Thailand. It is on the to-do list. I can't wait to go. It seems absolutely electric. Much better in Toronto. But give us the lay of the land. What's it like living there? Obviously, what's the crypto scene like in Thailand? Like, give me the lay of the land.
Yeah, I just think, I've never heard of anyone who comes to Thailand and at least, especially in Bangkok and say they don't like it. So if you never come, I think that they should. I think it just has everything for everyone. If you're into culture, if you're into food, bars, art, like all those things are plenty, especially in Bangkok, right? And I think the crypto scene is also pretty good in a sense that a lot of, foreigners, a lot of expats actually move here. So I think if you break down the landscape into local projects created by Thai locals, that may not be as many. But actually, if you look at it as the whole crypto scene in Bangkok and in Thailand, it's actually quite popping. And there are a bunch of people in Phuket, in Chiang Mai up north. So I think it's quite different pockets in Thailand. Yeah.
I love that. And the cost of living. I mean, again, I have tons of friends who've gone, family who's been, but everyone says it's just so cheap and the dollar goes so far there.
Right. You get amazing massage for less than $10 and they treat you like a king or queen.
Come
right.
on.
So yeah, it's perfect.
Oh. Wow, I love that. Any good events in Bangkok? I'm sure there's a couple sweet crypto events there.
Yeah, last week there was actually Southeast Asia Blockchain Week.
Nice.
And then later this year there's DEFCON in Bangkok in November. So I think it's going to be really, really exciting.
Amazing. It's on the to-do list. Hopefully the Crypto News team will be there to cover a couple conferences. Before we get into INIT Capital, tell us a little bit about yourself, your journey before the crypto world, sort of what you did at Stella, which is just an incredible company as well. And then, we'll segue that into INIT and we'll get into the fun stuff here.
Yeah, so born and raised here in Thailand, and then I went to study economics at UC Berkeley. I graduated before when blockchain at Berkeley got started, so it was a big miss for me. And that's why I went into traditional finance because I wasn't, as into blockchain because there was no blockchain at Berkeley back then. So I did investment banking for 2 years, and then actually jumped into product management at Tencent. So I worked at in the US, in London, and also in Thailand with Tencent at a Chinese firm. So those were all pre-crypto journey. And then I actually was going to go to Harvard Business School. And then I decided to drop out and build the first DeFi project, which back then was called Alpha Finance in 2020. And then we rebranded to Stella, I think early last year. Yeah. And then late last year, that's when I started INIT, which, happy to share more.
So cool. And you seem to have a love for DeFi. Of course, we'll get into INIT, but the coolest thing you guys are doing is building on Liquidity Hook, or you have built a Liquidity Hook Money Market. When people hear that, they're like, what the heck is a Liquidity Hook Money Market? And we'll get into that in a sec, but why DeFi in particular? So many incredible areas of crypto that you could have built on and with. You chose DeFi. Any reason in specific, or what exactly about DeFi really gets you going?
Yeah, I think just mainly multiple things, right? But myself coming from developing country, and really see what it's like to not get the global access. It's a big thing, right? You can only invest in Thailand, limited companies, limited things that you can invest in. Even if you're gonna like invest in ETFs of like US stocks, you need to be guaranteed of like a certain amount of money, right? So, and this is in Thailand, so it's a lot worse in many other countries. So I think, if I were to do something that I am passionate in and also like make an impact, I think it would be more in this area. And I think, other areas are really interesting too. But I just think like it resonates me more with experiences that I've gone through.
Well said. Totally true. Let's jump into INIT. Before we get into INIT itself, you got to tell us the name. I love the name. For those who haven't had the privilege of hearing British slang before, the Brits love, I'm trying to think of an example here, Tascha, but they'll be like, how was the game? INIT? Like they throw INIT on top of everything as sort of like Canadians do with A, or athletes will do with it's just sort of a way to conclude a sentence or just add a funny little filler. Did that have any play in the name, or am I way out to lunch here, and is it totally something else?
Yeah, I think whenever I name something, I really want to have the community sense of it. So, the serious meaning of it would be like, hey, this is the initial place of where things get, built upon, because I think INIT Capital, we want to be the initial place where, different DeFi projects can build on top, and then users just come to us and it's an all-in-one platform, right? So that's like the official meaning of it, like the rationale behind it. But I think the community and the fun sense of it is a lot more important for me. Like if we launch a product, it should be like remembered in one time when we say it, right? And I think like in it with the British slang, and also like we can play with the theme, like, are you in it? And that can be like a fun phrase we can use. Yeah.
Yeah, I love that. Again, just the power of memes in crypto, the power of memes on the internet. Like it's gotta be short, cool, a little bit sexy. And I mean, the name is just world class. So kudos on that. Tell us about INIT as a whole. In the bio, it says a liquidity hook money market. That is couple big sort of, I feel like the average Joe or Josephine could understand money market. They could tie two and two together, quick math. But once you throw the word liquidity and hook in there, I mean, even liquidity money market, okay, a couple maybe junior investors, but liquidity hook money market, boom, head goes right to the clouds. The normies must be like, what is going on here? You got to explain, Tascha, what exactly is a liquidity hook money market?
Yeah, so think of liquidity hook as plug-in for liquidity, in which nowadays in DeFi, right, things are so fragmented and there's so many types of dApps, so many use cases in DeFi. We are the platform that enable all kinds of those DeFi protocols to hook onto our liquidity. The technology itself is very modular and very composable, such that it can enable all kinds of protocols to easily hook and integrate and make use of our liquidity for whatever purposes. So comparing that to a typical Web2 or a traditional company business, right? So I think you can think of it as, a place where not just end consumer can easily come, but like other businesses can also like use our service. So it has like the angle of B2C and B2B in a sense, because the tech infrastructure is actually very composable. Yeah, so at the end of the day, like I think it becomes a all-in-one platform for both, operators of DeFi protocols or like end users as well.
So cool. And again, you guys are building quickly as well. You guys have lending, borrowing, and yield strategies already locked and loaded out for Mantle and Blast, which are two chains that are just sort of absolutely blowing up right now. We are recording Monday, April 29th. This will air early May. And I mean, Blast airdrop's supposed to be the same month after this airs. This is going to air in May. Blast airdrop's supposed to be in May. That should be bananas. So just so I have this correctly here, Tascha, people can lend, borrow, and access yield strategies with these liquidity hooks on INIT. It's just as simple as like you guys are not a bank, obviously, but you guys act as a money business, as an SMB, and people can come on and choose where they want to lend, where they want to borrow, where they want to access liquidity in a very simple, clean UI, clean UX space. It pretty much takes all the Web3 nonsense out of traditional lending, borrowing, and liquidity access in Web3. Am I sort of on the right page there?
Yeah, correct. So I think from end users perspective, it's an all-in-one platform in which you can easily do one click into different strategies, whether it's lending, simple borrowing, or different hooks. So you can think of these hooks as like automated strategies that enable you to like earn even more on particular angle, right? So you can do looping strategy, you can do margin trading strategy, depending on what's available from on the platform, right? So that's from the end user's perspective. But I think the beauty of it is that all these hooks that are built are actually, in collaboration built by the other side of the protocols, in which these are the other DeFi protocols that are hooking onto our liquidity and integrating onto the tech infrastructure to make sure that they tap onto the liquidity that we have to make use of, whatever they want to do, right? So for example, Ethena in this case wants to hook onto our liquidity and enable the end users to do a one-click, 5x looping to grow their Ethena liquidity, USDE liquidity on Mantle. So like as a result of all these hooks that users can use, these are all like created in collaboration with the other protocols that want to collaborate with us.
So cool. How do you guys choose which protocols to partner with? Like obviously the ones like Blast and Mantle and Athena, no brainers, tons of not even hype, but just, actual qualitative and quantitative metrics have all been checked off. A shit ton of money in the protocols, a lot of buzz, a lot of attention, a lot of really reputable people, institutions in these protocols. Do you guys have like sort of a checklist or a query prompt to go through and be like, hey, these guys are good, these guys aren't, blah, blah, blah? Like, how do you guys choose who to partner with? Because I'm sure you're getting just knocks on the door nonstop.
Yeah, so I think it actually two side of the demand and supply actually. So I think any integrations that make sense on the DeFi protocol side, usually would come down to whether end users want to use that hook. So I think it in the end, like these liquidity that the DeFi protocols, the other DeFi protocols are making use of, in the end, it's those liquidity are to make sure that end users are willing to supply as well, right? So I think that's one of the main thing. And then the other thing actually is all of these hook creation or liquidity hook creation, it's permissionless. So actually anyone can create, any protocols can create. So even though in the end we think that, hey, like end users may not want to use this hook actually, but if the DeFi protocol wants to create it, like they can create it.
Gotcha. Love that. Makes so much sense too. We got to take a quick break here, Tascha. When we get back, we are going to keep buzzing on addressing information asymmetry, as there is tons of asymmetry in the space, better management of liquidity, innovating DeFi's architecture, and some fun topics like RWA, DePIN, AI, point systems, Memecoins, and a little bit more. Until then, huge shout out to Prime XPT, longtime sponsors of the Crypto News podcast and longtime friends of CryptoNews.com. Prime XPT offers a robust trading system for both beginners and professional traders. It doesn't matter if you're a rookie or a vet. You can easily design and customize your layouts and widgets to best fit your trading style. Prime XPT is also running an exclusive promo for listeners of the Crypto News podcast. The promo code is CryptoNews50. That is CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Again, that is CryptoNews50 to receive 50% of your deposit credited to your trading account. And now back to the show with Tascha. Tascha, let's jump into sort of DeFi as a whole. Maybe we'll start with innovating DeFi's architecture. Money markets were built back in 2019, still based on older tech, where the lending and borrowing were and are sort of mainly through token trading. And for the industry to mature, the foundational infrastructure must be updated to keep up with market sophistication, new technology like AI, so on and so forth. What do we need to do as a whole? What do the builders like yourselves in the DeFi space need to do in order to make sure that DeFi continues to be quick, fast, easy, efficient, and permissionless?
Yeah, I think a lot of things actually, but I think to kind of like narrow down to the most important thing, I feel like whatever gets built pretty much needs to serve the demand, right? So we need to see like, what end users want and and how are the demands shift over time. And I think we're in the period in which there's so many new metas, so many new points, so many new things that people want to get into, right? So I think as a DeFi, operator, or like as a DeFi protocol builder, you have to think of like, how do you make sure that your product mechanics are able to move fast and capture those metas and those things as well? Because those are the things that end users want to, get exposure of, right? Whether it's points or whether it's, different high yields of different strategies. So as a product, how do you make sure that it's, versatile enough that it can capture those things, yet still stick to, your core product offering, and that, hey, this is what you do, and you're not like building like 10 different apps, right? And at the same time, while making sure that your protocol safety is like at most important. So I think like it's a lot more challenging now actually than like 4 years ago, when the main thing that users want to do like 4 years ago was yield farming, right? And I think that's it. Like I think right now it's actually like multiple things. People do LP, people do yield farming, people do point farming, do staking, restaking, like all these things. So you need to make sure like you can capture all of those things, whether it's through listing new integration or like enabling more composability so that you can work more with those protocols, but yet like stay true to what your product does still.
Yeah, that's so true. DeFi is just in a crazy place because, Tascha, myself included here, I think it's going to be memes plus DeFi, sort of those two sort of levers in crypto that really onboard the masses. I can't see NFTs really doing it unless some type of like ticketing, system comes into play. Yeah, I think NFTs are really just like, we were all just so bored and having so much fun back in 2021, but all the sort of quantitative economic value behind them is sort of gonzo again, unless it's ticketing, can't see it. I really think it is going to be DeFi and memes, which really is, and hopefully will be the two sort of areas that get us across the finish line and onboard the masses. One of the issue with memes and DeFi being, the meta and the narrative is information asymmetry, and it continues to increase in DeFi. It's like there's still, all the new projects, the first guys who get in are always the VCs or whatever PE fund is involved as well. It's got to be, if we're really going to go for, onboarding the masses and unbanking everyone and making an equal playing field, we need to address the information asymmetry and make sure that, people get quick and the same info ASAP. How can we do this? Is there a way to do this? Or is this just sort of like, we're going to follow the TradFi route where it's like the banks and the big dogs get in first, and then the smaller banks and the smaller big dogs get in second. And then on the 10th, 11th, 12th order of, of inclusion, that's when the normies get in. Is there a solution in hand, or is this show just going to keep on going on?
Actually, right now, I feel like it's less than before. Like I think back in, 2, 3, 4 years ago, all the projects are funded by VC, right? Very few are like, self-funded, or very few are doing, like pure, community launch. But I think nowadays actually, more variety of things. So like there are more node sales happening, a lot of the different, KOL rounds. So I think like things are more dispersed in a way, also like not so dispersed that everyone gets everything equally, in my opinion. I think there's still some pockets of those information still. But I do think that given with all these point farming, like it actually helps lower the barrier as well, right? Because now it's a relationship between protocol and end users. Like none of the VCs, matter here on point farming. None of the KLs matter. It's like, are you interacting with the protocol? If you do, then these are the points, right? So relationship is a lot more clear and lower that barrier. And I think that's also what we see quite adopted on INIT as well. A lot of people are using different hooks to also get exposure to these Athena sets or like icon
points.
Yeah.
What's your take on point farming? Because that was going to be one of my next questions here. This is sort of a phenomenon that's really popped off, I'm going to say Q4 of last year. Like there really weren't that many companies, protocols, products, services that were offering point systems, or they were, but they just sort of candidly sucked. And now it seems like every single new whatever in crypto that comes out and has a point system. You had Athena, you had every single one on Sol that came out with a point system, and it continues to airdrop stupendous amounts of actual, dollars to people. The big one that's supposed to pop off this month is Blast. Do you think this is good? Do you think, to me, I like it. It gets, like you and I just discussed, it gets the average Joe or Josephine involved. You can level up your points by doing very low leverage sort of, autonomous tasks, like liking things on Twitter, reposting, blah, 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 making very small trades back and forth. But I don't know. I feel like anything that's not organic in life, I feel like ends up coming back to haunt you. Am I wrong here? What's your 2 cents on this?
I think pros and cons. I feel like it serves the purpose of, distributing opportunities and yields to people, growing the protocol, growing the community. I feel like right now what we're seeing is you move from one protocol to the other to like point farm, right? And I feel like at the end of the day, like when the party ends, hopefully like later on and not soon, but in the end, there has to be the end, right? Like I don't think it's going to be like point farming forever. Like point farming forever would means that there will continue to be new protocol launching new tokens continuously. That is interesting protocol that people want to continue to move their liquidity from one protocol to the other, right? Like that would drive the continuous of point farming, which I feel like if you think about it, like it is also, depends on the market condition when you launch a token. It's also dependent on whether there are that many interesting projects that are launched. Because if not that interesting project, but they have a point, end users may not be as interested, right? So I think in the end, the cycle would end, in my opinion. But yeah, I think right now when there are still a lot of interesting things being built, new tokens being launched, then I feel like this is a good mechanic to make sure all the parties win. All the parties meaning protocols get to grow their usage, community gets, the value from contributing. Yeah, so I think it's a good mechanic for now. Also curious to see in the end, where would this liquidity end up in too, right?
Exactly.
Yeah.
So true. Let's buzz on the liquidity topic for a bit here, Tascha. Another thing that we need to do as a whole is have better management of liquidity. Startups often focus on attracting users with incentives, limiting the growth of operations, and forcing a choice between sort of user growth and product delivery. And the industry as a whole must create new ways for liquidity streams. How can we better manage the needs of growing protocols in relation to liquidity? Is there any light at the end of the tunnel here, or are we still going to have this, this song and dance, this big issue as we continue to grow in the space?
Yeah, I think the formula has to always revolve the product itself, right? Like I think initially there can be a bootstrapping phase, whether it's, points or whether it's, asking different funds to lend on your protocol. No matter what method it is, that's only for short term and for bootstrapping, right? But ultimately, like your product mechanics needs to be able to continuously generate that, yields to sustain the whole liquidity, right? Because in the end, like if liquidity sitting there is, in the billions and right now they're getting points, which is okay. But, ultimately, if the product cannot generate, high yields for this billions of liquidity, then, this liquidity is not stupid, right? Like they would just go where they would get more of the yield itself. So I think that is very important. And I think at INIT, we make sure that the mechanics already built in the yield generation in the protocol itself, because with each of the liquidity hook that gets built by any DeFi protocol, these actually become, driving the borrow demand of the liquidity, because each hook represents, one borrow use case, right? So ultimately, as more DeFi protocols get integrated, and right now there are 9 protocols integrated on INIT building these liquidity hooks. So as there increase these numbers, then that means that the borrow amount or utilized amount of the liquidity gets increased, which means that the yields upon people lending the liquidity will continue to be sustained at a high level. So I think we already thought of this to make sure that it's already in the product mechanic.
Yeah, I love that. Well said there. Tascha, we are getting a little tight for time. A couple more questions and we will wrap up here. We've covered a hell of a lot. This has been a treat of an episode. We'll go into sort of some rapid fire fun topics here. Let's start with meme coins. Meme coins are still probably the hottest part of crypto right now, for better or for worse. Still undecided. We'll see how that storybook ends. What's your take on meme coins right now?
I just think it serves the purpose as well. Like it's, people want to speculate. People want something easy, want something that people can connect to the other people as a community. And I think like now it's actually funny because any meme coin that tries to add utility to the token, like it gets hurt. People are not that interested in it. I think maybe because it's the wrong combination, right? I think meme coin means to like in with your friends and in for the culture. And sometimes it might just be that, right? So I think really understand the consumers and why they're into something, I think is really important.
Yeah, it's so true. RWAs, again, was just in Dubai for the Token 2049 conference. The topics that were talked about, RWA, DePIN, AI, DeFi, point systems, liquid staking, meme coins, sort of Bitcoin L2s and Bitcoin related products, onboarding the masses. That was pretty much it. Literally just like those 8 or 9 areas. I'm just sort of running through the list right now. We talked about meme coins, RWA, real world assets. I think we're still years and years out. Personally, that's just me. I do think in 20 years, everything will sort of be tokenized. It just makes sense. It makes for a more efficient world. But with all this buzz on RWAs right now, is it fugazi or is it real?
I think it's very early. I feel like any RWAs that will get adopted by DeFi consumers better have high yields in DeFi, right?
Yes,
Otherwise,
yes.
DeFi yields are much more higher. Yeah. So I think T-bills were high, last year because DeFi yields, were very low in the bear market, right? But now we're seeing the opposite. And that's why, adoption of T-bills, RWAs are not as much as before.
Good point. What about DePIN? Everyone's talking about DePIN, sort of rewarding users for their everyday unique data usage, cars, phones, you name it. What do you think about DePIN?
I also think it's very early and maybe it's just my opinion, but I think it's more of a phase as opposed to a sustainable sector, in my opinion. So it is yet to see. I just think it's a new meta that people are exploring, similar to metaverse, 2 years ago, where a lot of things are metaverse and people are exploring what could be metaverse. So I think we're in a similar phase, which is good. A lot of these phases will help us as an industry to discover things and innovate things. Yeah, that's just my thought.
I agree. With DePIN, and I just, a couple months ago or half a year ago when it sort of really came on everyone's radar when I was doing my own little research through it, it was just it came down to the incentives for me where I was like, okay, if Matt and Tascha both have a car and we're signing up with, DePIN company X, Y, or Z, and they are paying us $10 a month to use our data for the car. Let's say it's free on our end. We just let them use our car data and we get $10 a month. Okay. How many people, what are we going to need? 10, million people for that company to make $10 million a month? Is it, and then on our end, is it worth me having this piece of hardware on my car to make sure that I get the $10 a month? Probably not. I could not be fucked, candidly. So it's how much is it going to be worth on my end? Just the whole incentive structure of DePIN still sort of doesn't completely make sense to me. Hopefully I'm wrong, and hopefully it blows up and could be one of the things that onboard the masses. But just another area that's very trendy at the moment. We talked about point systems. We talked about meme coins. We got to jump into Bitcoin. Bitcoin's, I don't want to say getting hammered right now, but everyone's sort of getting tired of this chop phase from 60 to 72 that we're in, 60 to 73, whatever the case may be. Let's not discuss price action here, but just the L2s and the services protocols, products that are being built on Bitcoin, ordinals, runes, all this fun stuff. Is this here to stay? I mean, last week, 2 weeks ago, we had a bunch of L2s pop off and literally almost took the chain down. Are we hooped, or is Bitcoin still just a store of value and a way to, send payments to other people? Yeah,
I think Bitcoin, L2, and all the ecosystems building on Bitcoin, I think it's very, very early. There's no middleware yet. A lot of things being built are infrastructure, middleware, indexer. So I think we're going to need like a whole one more cycle of like hard, dedicated building. Perhaps, if all things get built in one cycle, then, next cycle can be like different apps, different DeFi on top, right? But I do think it requires like a whole committed, group of engineers to build. And I think the crowd building on Bitcoin are very much, different from the crowd building on EVM and Solana.
So true.
So I think it will also take like a whole, multiple, in my opinion, like multiple cycles to actually like expand beyond the group building now.
Well said. Tascha, what an episode. This has been an absolute treat. Really appreciate your time here. Before we let you go, can you please let our listeners know where they can find you personally and INIT Capital online and on socials?
Yeah, so we're both active on Twitter. My Twitter is Tascha, TASCHA _pan, like the two pans. That's on Twitter for myself. And then INIT is also active on Twitter. It's INIT Capital _
INIT Capital _. As always, we will include everything in the show notes. Tascha, really appreciate your time here. Thank you so much for coming on. I know we barely scratched the surface as well. When you come on next time, we will take a deeper dive. But pumped to have you on. Appreciate the time and wishing you and the team all the best.
Thank you so much. Great to be here.
Folks, what an episode with Tascha Punyaneramitdee, the core contributor and founder of INIT Capital. Folks, we touched a little bit of everything in this Liquidity Hook Money Markets, addressing information asymmetry, DeFi, liquidity, the crypto scene in Thailand, some point farming, some trends, creating new liquidity streams, Memecoins, RWA, DePIN, Bitcoin L2s, you name it. Huge shout out to Tascha and the team for making this happen. If you guys enjoyed this one, and I hope you did, please do subscribe. It would mean the world to my team and I. Speaking of the team, love you guys so much. Thank you for everything. You guys are the best. You Stas, you're the men. And back to the listeners, love you guys. Keep on growing those bags and keep on staying healthy, wealthy, and happy. Bye for now, and we'll talk soon.